In this presentation, we will continue on with our comprehensive problem involving the Capital Projects Fund, the Debt Service Fund, and the government-wide activities. We entered information last time for the first year of operations and then the closing entries. We're going to continue now till year 2, starting with the first transaction within year 2. So you'll recall in the prior presentations that we went through here and we did the closing entries for each of these items for the capital projects funds, the debt service fund, and then the government-wide activities. Now we're going to be down on year 2, which is going to start on line 49, and we're looking at number 13. Scrolling down to the data on the left-hand side, we see number 13 says we have the budget for year 2. For the debt service fund earmarked sales tax, we got the expected for year 2, 190,000. The appropriations, including principal payment and interest payments on the serial bonds, is going to be the 220,800. So we're not going to do the budgeting activity for the capital projects fund, so there's going to be no activity here. If we then scroll over to the debt service fund, this is where we're going to be entering the data. We are in column O, so we're in column O, scrolling back up, debt service fund. We're down here, way down here in line 49. So here we have our transactions. This is what we have in terms of our trial balance, our beginning trial balance for the beginning of year 2. We're going to record the estimated revenues. So we've got estimated revenues up top. Now the revenues has a credit balance. You'll recall that when we have the recording the estimates, we're going to have the opposite balance, which will of course then be a debit balance. So we're going to debit estimated revenues. We're going to credit the appropriations, the credit account, the amount that's similar to expenses. Expenditures has a debit balance. Expenses then has, the appropriations, the budgetary account related to expenditures is going to have the opposite, or a credit balance on the appropriations. Then the difference is going to go to that budgetary fund balance, the revenue over the expenses, or expenses over the revenue in this case. So we're going to say that the estimated revenues is going to be equal to. Scrolling back over, we're going to pick up this number from our data. We are in number 13. So we're going to pick up the revenue of the 190. Then we're going to credit in Q50. I'm going to do this with a negative and then scroll back over to number 13. We are going to credit the 210,800. And then the difference, we need another debit now. So we need another debit, which is going to be the negative sum of these two amounts. And there we have it. So debits equaling the credits. You'll see that once again, I construct this as I see to build it, not necessarily putting the debits on top if I think it makes more sense for the construction in some other format, as is here. So let's post this out. We're going to go to the estimated revenues. Estimated revenues, we're going to be in cell U55, where we will say equals. Scroll back over and pick up that 190,000. Then we have the appropriations. As if we scroll down to the appropriations, we are down in U60. We're going to say equals and scroll back up to the appropriations. Enter. There we have that item. Then we have the budgetary fund balance. Budgetary fund balance in cell U53 equals, and we'll pick up the budgetary fund balance. That puts us back in balance here. We have now recorded our budgetary accounts in the debt service fund. We're not going to have any budgetary accounts over here. I'm over here now in column Y, which is the government-wide activity. Nothing here because this is on the accrual method, so we're not going to have any activity in the budgetary accounts. Back to our data, we're going to scroll all the way to the left, back to the data, and we're going to say that 13 is done, so I'm going to make that green, so we'll highlight that and make it green. Then we want number 14. Number 14 says that sales tax has been collected for the debt service. Sales tax, in other words, specifically that will be assigned to the debt service fund. So we're going to record this in the government-wide activity first. So sales tax is going to be a form of revenue. If we scroll all the way back over to the government-wide activity, we're over here in column Y. If I scroll back up, we're in the government-wide activity. We're going to scroll all the way down, and we're down here in number 14. So we are in Y52. We're going to say that cash is going to go up because we have taxes that we've collected. The other side then going to the revenue account. So it's going to be the general revenue for the taxes. Then the amount is going to be in Z52, where we will say equals. Scroll all the way to the left and pick up the amount of the 160,000. That'll be the debit and the credit. So there's our transaction. Let's post it now. Here's the debit. We're going to scroll to the trial balance. We are in AE50. equals, and we'll pick up the debit of the 160,000. Then we have the general revenue taxes. That's going to be the credit. So we are in AE 59 equals, scrolling over and picking up the credit of the 160,000. Now this revenue was collected for or earmarked for the debt service fund. So therefore we're going to put the same or similar transaction in the debt service fund. We're going to say that cash is going to go up for this fund. We're in the debt service fund. We're in column O. So if I scroll up, we're in column O. Scrolling back down, we're in cash is going to increase and the revenue is going to increase. So the only difference basically is the name of the revenue account. If we pick up these numbers, then I'm going to pick this up from the transactions we just did. Same type of numbers, or same numbers, same transaction in essence, except for the name of the revenue account. Cash is going to be debited. Let's go up top and pick up the cash amount. We are in U50, where we will say equals. Scroll over to that 160,000. Then let's pick up the revenue. So we're going to say to the revenue, it's going to be up in U54 equals. Scrolling over to the revenue, 160. There we have that, and that puts us back in balance. Let's scroll over to the capital projects fund, where nothing happens. Nothing's going on here. Nothing to see here. So we'll put none, and then let's go back to our data. So we're going to highlight the data green. We're going to say that one has been completed. We're done with number 14. Moving on to number 15. Number 15 says we have billing for the construction project, for the capital project. So we have billing for the contractor of the capital project. Let's go ahead and post this out first to the government-wide activities. So we're going to scroll over to the government-wide activities. That's in column Y. So we're over here in column Y. That's where it happens to be. We're down here in number 15, which is on line 55. We're going to increase the asset now because we're making something like big here, like a bridge or a building, some kind of capital project. So anything that we're doing that's going to be contributed to it will be increasing that capital project. So we're going to debit the asset account. And then the other side is we haven't paid it yet. So it's going to go into a payable account. We're going to call it contracts payable. Contracts payable. I'm going to be in Z55. We're going to pick this information up from the data. So I'm going to say equals and scroll all the way to the left to pick up that data, which is going to be the 700,000. So the debit and the credit then 700,000. So then we have the construction work in process. Let's post that. We're going to be in AE52 equals, and we're going to pick up the debit in the construction work in process. Then we've got the contracts payable. That's going to be in AE56 equals, and we'll pick up the credit. So there it is. We are back in balance. What do we do with, now if we consider the other funds, with the debt service fund, we're not going to do anything because this doesn't have involved any debt activity, and because the contracts payable is short term. And in the capital projects fund, we're going to record a similar transaction, but first we're going to have to reverse the encumbrance, which is like the holding account, and then we're going to record this transaction except for, as we're not going to record the asset. That's going to be replaced with an expenditure because we're on the modified accrual basis. Let's do it. Let's go over to the debt service fund, and we're in column O. Nothing happens here, nothing to see here. We're going to go then back to the capital projects fund. We are in column E, so E53. So you'll note here, as we look at the trial balance, we still have this encumbrance hanging out here because we closed everything out but the encumbrance, because the encumbrance, I would think of it more as a clearing account that's just going to hang out there until we're going to need it there until we reverse it when we basically have the related expenditure, which is now. So now we have it related at least for 120,000 of it. So we're going to reverse 120,000 of this, then record the related expenditure. So we're going to, this has a credit in it. We're going to debit it to make it go down. So we're going to say the encumbrance outstanding is going to be debited, and then we're going to credit the encumbrance, and it's going to be for the amount of the 700,000. 700,000 is what we're doing right now, the 700. There's the debit and the credit. So let's post this out. So we'll do this first, and then we'll record the related expenditure. So here's the encumbrance outstanding. We are in K56 equals, and we'll pick up the 700. And then the encumbrance is going to be down here. That is going to be in K61 equals, and then we'll pick up the credit and enter. So there we have that. That puts us back in balance. Then we're going to do the second side of it, recording the expenditure. So the expenditure is happening now. We'll record the expenditure. That's going to be a debit to the expenditure. And then we're going to have a credit to contracts payable. Contracts payable then being the credit. So it's going to be for the same amount, the $700,000. So there's the second transaction related to this. Let's post it. We have the construction expenditures in K61 equals, scrolling over to the 700,000. Then we have the contracts payable. Contracts payable is going to be in K52 equals, and we'll scroll over to that credit, and that should put us back in balance again. So there we have that. Now let's see what we have next. I'm going to say that number 15 has been completed. We're going to make that green. Highlight it, right click, making it green. Now we're on number 16. Number 16 says that we have landscaping that's going to be done. We're going to say that's part of our capital project, but it's not included in the encumbrances. So in other words, the encumbrance that we had set up here, we didn't include the landscaping item in that encumbrance amount. Let's first go to the government-wide activities and post it there. So we're going to scroll back over to column Y. So we're in column Y. And this is going to be in a part of the construction progress again. So we're making this big project of a building or something or some kind of thing that's going to be a capital asset. Therefore, we're going to put it into the construction work in process. So anything that's part of this project, we're going to put into the construction work in progress till it's completed asset account. And it's going to be a credit. We're going to say we paid this one in cash. So let's pull the amount out in Z58. I'm going to say equals and scroll all the way back to the data where we pick up that 120,000. That'll be the debit and the credit. So there we have that. Let's post it out. Here's the construction work in process. If we scroll back up, we are in AE52 where we will say F2 plus F2. Scroll back down. I'm going to pick up that 120,000. Then we're going to be in cash. So here's cash. If we scroll back up to the cash item, that's in AE50. F2 plus F2. Scrolling back down, we're going to pick up the credit of 120,000. And there we have that. Now we can think about what's going to happen to the other fund accounts. In the debt service fund, nothing's going to happen because we're not dealing with a debt here. And then in the capital projects, we're going to have a similar transaction. However, we're going to record this to expenditure as opposed to an asset. We're not going to have to reduce the encumbrance because we had not encumbered this amount. So let's go back to the debt service. Nothing happened here, nothing to see here. And then we're going to go back to capital projects. So the capital project fund, we don't have to do this. It's similar transaction here, but we don't have to do this first step because you'll recall that we encumbered the entire basically contract for the contracting before. This landscaping wasn't part of that contracting activity, therefore not encumbered. So we're just going to go straight to recording the expenditure. So we're going to say debit the construction expenditures, and we're going to credit cash. So there's going to be our transaction. The amount will be for the 120,000. So we'll pick up that 120,000. That's going to be the debit and credit. So there we have it. Let's post this out. Here's going to be the construction expenditures. That's going to be down here in K62. Something's in it. So I'm going to say F2 plus F2. Scroll back over, and we're going to pick up that debited amount. And then we have the cash. That's going to be the cash. That'll be up top in K50 equals. Scrolling back down, I'm going to pick up the cash. Is going to be the credit. There we have that. That puts us back in balance. All right, so we're going to scroll back over to the data. We're going to say that 16 has been completed. We're going to select that, highlight that, make it green, and then move on to number 17. Number 17 says we have a final payment made on the construction project. So we got the final payment that's going to be made on the construction project. Let's first go to the government-wide activity and see what we have there. We're going to go over to the government-wide activity. Now you'll recall that the construction project, we had a payable outstanding of the $700,000. And so now we're saying that we're paying that. So we're going to say that that's going to go down. We're going to pay that. And we're also going to pay off the $64,000 contracts payable, the retained percentage. So we're going to pick up those two amounts. We're going to pay it with cash. So we're going to say this is going to be equal to the contracts payable. We're going to pay that. And we're going to pay the retained percentage. And that's going to be the $700,000 and the 62,400. We're going to pay it with cash, so we're going to do the plug formula, the negative sum of those items, and there we have the credit. That's going to be going to cash, so we'll pick up the cash up top, and there is that. So let's go ahead and post this one out. We're going to say contracts payable. So let's scroll over to the contracts payable. There's something in it in AE56. So I'm going to say F2 plus F2 and pick up that 700,000. And then we have the retained percentage. That's going to be right below it. We're in AE57 equals, and that's going to be the 62,400. And that'll bring that down to 0, actually 62. And you'll note I picked up the wrong number. I picked up the 62,400. It should be 64,000. So if I just change this number here to 64,000, then that'll pick it up and that'll bring it down to 0. So we've got this, the 700, the 64, negative sum is going to be the 764. This then is being posted here, bringing us back down to 0. So these two items going down to 0. Then we're going to post the cash. Cash will be up top. We're in cell AE50, F2 plus F2. Scrolling back down, and we're going to pick up the credit. So there we have that. So now we can think about what's going to happen to our other fund accounts. With the debt service fund, there's not going to be any activity there. We're not dealing with the debt service fund. When we think about the capital projects fund, we're going to have a similar type of transaction, pretty much the same transaction within the capital projects fund, paying off this amount for the contracts payable. So let's do that. We're going to go back to the debt service fund. We're in column O, which has none. Once again, nothing to see here, nothing going on. Debt service fund. We're going to scroll back over to the capital projects fund, number 17. Pretty much the same thing happening here. You'll see we have these two amounts on the books once again, the 700 and the 64. So we're going to record same type of transaction for them. We're going to say that this is going to be equal to the contracts payable. Then we have the contracts payable retained percentage, the amounts being 700,000 and 64,000. And then the credit's going to be what we actually pay in cash. Going to do the negative sum plug formula for this number. And that will be the cash that we spend for it. So we're going to credit the cash. There we have it. So here we have the contracts payable. Let's do that first. We're going to scroll back up. We have the contracts payable. That's in K52, where we will say F2 plus F2. Scroll back down. I'm going to pick up that 700,000. So that brings it to 0. Then we have the contracts payable, the retained percent. So let's do that. We're going to scroll back up. We have the contracts payable retained percent in K53 equals, and we're going to pick up that 64,000, bringing it to 0. And then we have the cash. So then we have the cash amount. We're going to scroll back up, pick up the cash amount in K50, F2 plus F2. Scroll back down, and we'll pick up the cash amount, bringing it down. So there that is. Let's scroll back over and see what we have next. We're now completed number 17. I'm going to make that green as it has been completed. That's what we've been doing so far for that when we've completed stuff. Now we're on number 18. Number 18 says we have a debt service payment made. So we have a bond payable payment. We're going to pay off the bond payable, actually reducing the bond payable. As we do so, we're also going to record the reduction in the premium of $1,600 and the related interest of $30,400. So let's first record this in the government-wide activities, and then we'll take a look at this in the funds. So we're going to scroll to the right till we get to the government-wide activities. That's going to be in column Y. So we are in column Y. And what we're going to say here is that we have the bonds payable. Bonds payable, we're going to actually pay down some of the bonds payable for $160,000. So paying down part of the bonds payable, reducing the bonds payable then means we're going to debit the bonds payable. So bonds payable is going to be debited. We're also going to record the related principal or premium reduction. So here's the premium on the bonds payable where it's got a credit. We're going to debit it to go down. So we're going to record the premium on the bonds payable. And then we're going to record the related interest payments that we make, which is going to be the expenses for the interest. And then we're going to pay out the cash. So cash will then be paid. So let's pick up these amounts. We basically were given these amounts in the data. So in Z65, we're going to say this equals, the bond payable is going to go down all the way to the left, going to go down by the 160. The premium is going to go down. I'm going to say equals and go all the way to the left again, and we're going to pick up the premium of the 1,600. Then we have the interest portion. Again, I'm going to say equals and go all the way to the left, and we're going to pick up the amount of the interest expense, 30,400. And then we're going to say that the cash is going to be the negative sum of those. So I'm going to say negative SUM and brackets and pick up that amount. So we're going to sum that up, flip the sign. Now let's go ahead and post this. So we have the bonds payable. So we'll scroll back up to the bonds payable. We're in cell AE54 equals, and we're going to scroll down to that 160,000 and enter. Then we have the premium that's going to be reduced. So the premium is going to be up in AE55 equals. We're going to scroll down to that 1,600 and enter. Then we have the expenses. So the expenses are going to be down here in AE61 equals, and we're going to pick up that 30,400 and enter. And then finally, cash is going to go down. So cash is going to be up top in AE50. I'm going to go, something's in it, so I'm going to say F2 plus F2, scrolling back down, and we're going to pick up that credit of the 192. So there we have that. That puts us back in balance. Now we can think about, okay, what's going to happen to the debt service fund if we break this out? We've got the payable, but we're going to record that, but we're not going to record it as a payable because there's not a payable on the books for the debt service fund. We are going to record it as an expenditure. And then we've got the a premium on the bond payable and the interest. These are both going to be recorded as a form of basically interest expense expenditure on the debt service fund and then the cash. Let's see what that'll look like. Let's go over to the debt service fund. So here we are, number 18, column O, line 62. We're going to debit the expenditure for the interest. So I'm going to debit the expenditure for the interest. I'm going to pick up this information from the prior journal entry we did. So I'm going to say equals and scroll over to that journal entry. And we're going to say that the interest portion is going to be the 106 and plus the 30,400 for 32,000. It's going to go into the expenditure. Then we're going to have the expenditure for the principal, enter. And that's going to be equal to, if I'm going to pick this up and piece it apart from the journal entry we made in the government-wide activity, it's going to be the 160,000 and enter. And then we're going to have the credit, which will be the cash. I'm going to say negative sum to pick up the cash. And there we have that. That's going to be the cash amount for the credit. So we're going to credit that for the cash, and there we have it. So we have the expenditures for the interest. Let's record that. We're going to be up in cell U61 is going to be equal to, and scroll over to that 32,000. And then we have the expenditure for the principal. Actually, I was off. I'm going to delete that in U61. We're going to put that where it should be in U62 equals, scrolling back over and picking up that 32,000. Then we have the principal. That's going to be above it. That's in U61 equals, and we're going to pick up that 160,000. Then we have the cash. So cash is going to be up top. We are in U50. I'm going to say something's in it, so I'll say F2 plus F2. Scroll back down, and we'll pick up the cash of the 192,000 and enter. So there we have that. Puts us back in balance. Then if we scroll over to the Capital Projects Fund, we're going to go back to the Capital Projects Fund. There's going to be no activity in the Capital Projects Fund. Nothing to see here. So then we'll see, and 18 is done. I'm going to make that green. Because we have completed it. And then we can move on to number 19. Number 19 says that the construction project declared completed. So we've completed the construction project. All capital project funds are closed, and the remaining cash balance is transferred to the debt service fund. Must amend the debt service budget because the transfer was not anticipated. Okay, so the project is closed. We're going to end up closing out the capital projects fund. We're going to close it out to the debt service fund because we're going to take any other remaining funding and put it into the debt service fund to take care of any of the debt that is necessary to pay off that was needed in order to do the capital project activity. Let's first do this, however, in the government-wide activities. So let's go to the government-wide activities and see what happens there. So we're going to scroll all the way over. We're going to be in column Y. We are now in column Y. So if we take a look at our trial balance in column Y, we're going to say that our project is now completed. So you'll see that we have this amount in the construction work in process. We've completed the project at this point in time, and therefore we're going to move it from the work in process account to the completed thing that's been done, which is apparently a building. We've made a building here. So the building is now completed. We're going to move it from the in process account to the completed account, one asset to another asset. The construction work in process has a debit balance. We're going to do the opposite thing to it to make it go down, a credit. And then we're going to put it into the debiting the account of the asset of building. So let's do that. We're going to scroll back down. We're going to go to number 19. And we're going to pick up the debit of the building. And then we're going to credit the work in process account for the amount that is in work in process, that being the 2700000, I believe, I hope. We'll post it out and we'll see. It should go to 0. The construction should go to 0 if that's the right number. So we have the building. Let's scroll back up and post out the building. That's going to be in cell AE51 equals. Scrolling back down to pick that number up, we are picking up the building, the 2,700,000. There is that. Now we're going to take it out of the construction work in process. So we're recording construction work in process, scrolling back up. We're going to pick that up. That's in cell AE52. Something's in it. Therefore, we're going to say F2 plus F2. Scroll back down, pick up the credit for the work in process. So there we have that. We've, in essence, moved it from the construction work in process to the building. All right, so now we're going to go over to the, let's start with the capital project. Now, obviously, when we go to the capital project, we're not going to have this transaction because this transaction is going to be recording an asset account, long-term asset accounts, 2 long-term assets. We don't have those in the capital project fund because it's going to be a modified accrual basis. So let's take a look at what we do have in the capital projects fund, and part of that is going to be a transfer from the capital projects, what's ever left over, to the debt service fund to pay off any debt necessary to fund the capital project. So now we're here in the capital projects fund. We're in column E. If we go over to the trial balance, we're going to say, okay, the capital project is completed. We're done now. We're done with the capital project. If we look at the balance sheet, we're going to say, hey, we still got money here. We still have financing on the balance sheet. But the whole point of this fund is to track the capital project financing. So this is money we don't need in the capital project fund, and therefore it should go back to the debt service fund to pay off any kind of debts that were outstanding that we took for the capital project. So in essence, we're then going to remove this money and put it into the debt service fund. So cash is going to go down, and we're going to call the other side kind of like an expense, but a transfer type of account, other financing uses, and it's going to be a transfer out. So we're going to say, all right, cash is going to go down. So we're going to credit the cash amount. So cash is going to be credited, and then we're going to debit the other financing uses. Other financing uses is going to be the debit. So there we have it, and the amount that's in there is going to be the 1050000, and that's going to be the debit and the credit. So there we have it. Let's post this out. Here's the debit. Let's scroll up, and we're going to pick up the other financing uses. That's going to be in K60 equals, and then we'll scroll over to that debit amount, and there we have that. Now we'll pick up the other side, which will be cash. We'll scroll up top. Cash is going to be in K50. We're going to go into it by saying F2 plus F2. Scroll back down, and we'll pick up the credit of the 1,050,000, and there is that. That then puts us back in balance. So we've closed out the cash account, and we're going to transfer that to the debt service fund. The next thing we want to do, adjust the fund balance categories for the amount that is assigned. So we're going to reduce this amount that was paid out from the assigned fund balance. So we're going to scroll back down, and we're going to say, okay, the fund balance, we're going to debit fund balance assigned. I'm going to scroll back up and say we want the fund balance assigned, and then the other side is going to go to the other financing uses, and in essence we're going to close out the other financing uses. So we're going to say closing out the other financing uses. We're closing it out to what would be kind of similar to the equity account, the fund balance account, but to the assigned fund balance account rather than the restricted fund balance account. that's going to be for the amount that's in the other financing uses, that being equal to the $1,050,000. So here's our transaction. We're going to say, all right, here's the fund balance assigned. We'll scroll back up. We're going to say fund balance assigned. That's in K55 equals, scrolling back down, and we'll pick up the fund balance assigned and enter. And then the other side of it's going to go to the other financing uses. Other financing uses is going to be other financing uses here in K60. Something's in it, so I'm going to say F2 plus F2. Scroll back down, and we'll pick up the other financing uses. So that puts us back in balance here. So now we're back in balance, and we could do the rest of the closing process. So now we're going to do the closing entries, and we're going to close out. So you'll note we're going to close out even the encumbrances now, as we didn't do last time, as we had the project still open last time. So now the project is done, so we're going to finish off, and we're going to close these items out, and then we'll close out the construction expenditures, and we'll close everything out, and we'll end up with basically zeros in our completed account here, because the project is now done. So what we're going to do is we're going to do whatever we need to do to make everything go down to zero. So let's do this line by line. I'm going to make this a little bit smaller so we can see it in one area. Not that small. So we'll start off with the encumbrances. So I'm going to say the encumbrances has something in it. The encumbrances have a debit, so we're going to credit it for whatever's in there to make it go to zero, which is going to be a credit of 1260000. Then we have the construction expenditures. Construction expenditures. It's got a debit in it, so we're going to credit it. So we're going to credit it for whatever's in there to make it go to zero by $820,000. And so that's going to go down to zero. Then we're going to say the encumbrance is outstanding. We're going to make it go down to zero. It's got a credit in it. So we're going to say the encumbrance is outstanding then. It's going to be this amount. Or that is the name of the account. It's going to have 1260000. We're going to debit that. And then we have the fund balance assigned. So I'm going to say this equals the fund balance assigned. It's got 50 in it, and it was a credit of 50. So we're going to debit it 50. And then finally, the last one we have up top is the fund balance restricted. And it's got a credit of $770,000. So we're going to debit it $770,000. So there's that. Let's post this out. We got the encumbrances. So we'll scroll up to the encumbrances. That's in K61. Something's in it. So I'm going to say F2 plus F2. Scroll back down. We'll pick up the encumbrances of that credit and enter. Pulls it down to zero. That's what we want. Construction expenditures. That's going to be in cell K62. Something's in it. So we're going to say F2 plus F2 and scroll back down, and we want to pick up that $820,000, bringing it back down to zero. Then we have the encumbrances outstanding. So the encumbrances outstanding are up in K56. Something's in it. So we're going to say F2 plus F2, scroll back down, and we want to pick that amount up, that $1,260,000, taking it down to zero. Then we have the fund balance assigned. So the fund balance assigned is in K55. Something's in it. So we're going to say F2 plus F2. Scroll back down, and we want to pick up that $50,000 and enter. And then finally, we have the $770,000 in the fund balance restricted. That's in K54 equals, scrolling back down, picking up that $770,000. And there we have it. So now we've closed out the capital projects fund because the capital project is over. Now let's take a look at the debt service fund. So we'll scroll over to the debt service fund. Now in the debt service fund, you'll recall that we transferred into the debt service fund the amount that was left over in the capital projects fund, that being the $1,050,000. So that's going to go from the capital projects fund into the debt service fund. We're in the debt service fund now, so we're going to increase the cash for it, debiting cash in the debt service fund. It's going to come from an other financing source. So we're going to call it an other financing source. It's going to be an interfund transfer in. Interfund transfer in. And we transferred 1050000. This was from the debt service fund. It might be better to actually say equals and pull it from the journal entry. Here's the journal entry on the capital projects fund, which is going to the debt service fund. And we're going to have the debit and the credit. So there it is, same amount. So let's go ahead and post this out. We're going to go up to the cash up top, and we're going to say that cash is going to be increased. So we're in U50, F2 plus F2. Scrolling back down, we'll pick up that 1,050,000. Then we have the other financing sources. So other financing sources, and this is the interfund transfer in U58 equals that 1,050,000 and enter. Note that this was posted to the estimated account rather than the other financing sources. This will be adjusted shortly. So we have that. There we have that. Now, the other thing we want to do is note that, of course, we didn't put the 1,050,000 in the budgetary accounts because we didn't know that there was going to be that much left over after the capital project was done. So we're going to actually just adjust the budget again. We're going to adjust the budget for this amount that we actually know about now. So the budgetary account, we have the estimated other financing sources, the transfer in. I'm going to say that there's adjusting the budget for the same amount. Kind of after the fact here, we're going to adjust the budget here. Estimated other financing sources for the transfer in, and the other side's just going to have to go to the budgetary fund balance. And so we're just going to fix the budget after the fact, as if kind of like we knew this was going to happen. And then there is the estimated other financing sources. So we'll go back up, and you'll note that I put this amount from the actual amount in the estimate. So this amount should actually be in other financing sources down below. So I'm going to delete this. I'm going to post this to the other financing sources with the transfer in. So that's going to be the actual account in U56 equals, there's that credit. Now we can post these items. So these two items are going to be the estimated other financing sources. Now we'll record the estimate. Estimated other financing sources, and that's going to be the interfund transfer in. That's going to be the debit. And the other side is going to go to the budgetary fund balance. Budgetary fund balance is going to be up top. That's going to be in U53. So if something's in it, going to say F2 plus F2. We'll scroll back down and we'll pick up that credit. And so there we have it. So that'll put us back in balance.